Hi, everyone. Thank you for joining us at the webinar today, where we'll be discussing about Shariah investing and introduce you to our new Endowus Shariah portfolios. My name is Kyungju, Investment Associate from Endowus, and I'm joined by three esteemed speakers from our Shariah investment partners. Before we start, quick disclaimers from Endowus, Azimut, Franklin Templeton, and HSBC Asset Management. We'd also like to extend a special thank you to the members from Islamic Finance Singapore for joining us in the audience today. So again, we have three esteemed speakers with us today: Afiya, Portfolio Manager and Shariah Investment Specialist from Azimut; Alan, Portfolio Manager of the Franklin Templeton Global Shariah Equity Fund; and Jacqueline, Head of ETF and Indexing Sales from HSBC Asset Management. Let's hear a quick company introduction from the respective speakers. Let's start with Afiya, Alan, then Jacqueline, please.
Thank you so much, Kyungju, and thank you to Endowus for organizing this event. As alluded to by Kyungju, I currently hold the privilege of being a part of the team managing the global Sukuk strategies within the Azimut Group. To begin with, Azimut is one of Europe's largest independent asset managers with a strong global presence across 18 countries. We have been listed on the Milan Stock Exchange since 2004 and currently hold a market cap of over $4 billion. Nearing our fourth decade, the company has grown into a powerhouse of investment management, doubling in size almost every 5 years. We have total assets of about $112 billion currently, and over 90% of them are held in public assets. We are also actively expanding our presence in private markets and diversified alternative strategies in the US with the Bezos and Muros families. In conclusion, we basically have a strong track record of delivering performance, and the group continues to empower investors with innovative and tailored financial solutions. Thank you so much.
Thank you, Afiya. Alan, over to you, please. I'm so sorry, Alan. I can't seem to hear your audio properly. Shall we move on with Jacqueline first and come back to Alan later? Jacqueline, over to you, please.
Hi. Can you hear me now?
Oh, now it's working. Let's go back to Franklin Templeton. Thank you.
Yeah. All right. Sorry. Hi, good afternoon, ladies and gentlemen. Sorry for that little technical glitch there. Just a quick introduction to Franklin Templeton. We have 1.6 trillion under management currently. We have about 75 years of active management experience. We're based in countries with investors at over 150 different places. We employ 1,600 investment professionals. And within that, we manage about $620 billion in equity. I sit under that umbrella. We manage about 470 billion in fixed income, and in alternatives, 250 billion. And in multi-assets, about 175 billion. We have, as you can see on the slide on the right, a number of investment managers within this umbrella. I sit in the Franklin Templeton Group, and I'm sure we can expand upon what we do at Franklin a little bit later. Back to you.
Thank you so much, Alan. And now Jacqueline, please. Jacqueline, so sorry. Your audio doesn't seem to be working this time. So sorry about the technical difficulties over here. Still no. No, not working yet.
Are you able to hear me?
Yes, perfect. Thank you.
All right. So some technical glitch. That's fine. So yes, as I was studying, yes, HSBC Asset Management. So as you can see from the slide, we are a global asset manager, managing over the assets of 740 billion. So our presence is across over 20 countries globally. So we are providing solutions across all big diverse of clienteles across from largest institutions, retails, private clients, corporate clients. Where I sit right now, I belong to the passive team. So this is also one of our key expertise in terms of managing index strategy, where we've been managing index strategy for over 30 years that range across ETFs, index fund mandates, and many other investment vehicles. And this is basically a capability books of over 160 billion. So short introduction, over to you.
Thank you, Jacqueline. We're also taking in questions during this webinar, so please go to this link you see on the slide over here and type the keyword 2025 Shariah to access. You can also scan this QR code and put in any questions that you want to ask during this webinar. A lot of people tuning in today are already familiar with us, but I understand that some of you may be new to Endowus. So here's a quick introduction about Endowus. We are a digital wealth platform, and our mission is to give great conflict-free advice that will help you invest better to live better. That means we don't earn money from commissions, and we give you back all the commissions we receive as 100% cash back. We also offer our services at affordable prices. We're backed by some of the most well-known and respected wealth and tech companies in the world. We work with world-class fund managers like Azimut, Franklin Templeton, and HSBC to give access to high-quality funds to ordinary investors like you and me. So let's kickstart the session by asking ourselves, what does Shariah investing really mean? Alan, could you walk us through the definition of Shariah investing?
Sure, Kyungju. So how does Sharia compliant investing work? I think first and foremost, it is governed by the requirements of Sharia law and the principles of the Islamic religion. There are certain do's and don'ts. I think we in Singapore have heard of the words halal and haram. Halal means permitted and haram means prohibited. So for example, a Sharia compliant investment includes halal industries, but excludes haram industries. For example, selling prohibited goods like tobacco and alcohol. On top of that, there are other specific considerations when screening for exclusions in a Sharia compliant investments. The first really is participation with excessive risk or uncertainty. And I think that could be translated into companies that potentially borrow too much or are too leveraged, for example. Anything involving gambling or speculation, I think that's very clear. Sin stocks are not allowed. And the third, which is, I think, less well recognized, is that receiving interest payments on investments or in any other form is also not allowed. So, for example, companies with too much cash on the balance sheet is usually also not allowed because it is assumed that they generate interests from that cash. And then finally, a Sharia compliant mutual fund will also have a board that comprises Islamic scholars who will research and decide which companies meet the rules for investment. And finally, this board of scholars on a quarterly basis will actually issue a fatwa or certification saying that this mutual fund or investment vehicle is actually Sharia compliant. I think I've touched on some of the more pertinent exclusions and key points. So back to you, Kyungju.
Got it. Thank you so much, Alan. So in essence, Sharia investing involves aligning your investments with Islamic principles, specifically by avoiding activities that are considered haram or harmful. So with that brief overview, Jacqueline, could you elaborate on what investing in Sharia compliant equities actually look like in real life?
Yes, sure. I think before we touch a little bit on the in real life, I think just coming from a passive approach, I think what we look into when we manage passive index strategy, just as a step back, is that we look at really two important objectives. First, we look into how close we track the index. At the same time, we are also looking at how to minimize cost when it comes to like index rebalancing of the index. So with this consistent approach, this is also applied to how we manage our Shariah strategy. So having launched our HSBC Islamic Global Index Equity Strategy back in the year 2000, so we have done, it is a long history. We developed very strong experience in terms of managing Shariah funds. So when we look into this fund in particular, this is a passively managed fund. It tracks the Dow Jones Islamic Market Titan 100 Index, and this consists of 100 largest global stocks that comply with Islamic investment guidelines. So what it means by that is that it is adopting a full physical replication strategy that aims to invest in all the constituents of the index in the same proportion. Now, as what Alan mentioned earlier, so in terms of screening, we have a universal Islamic, pretty much Islamic screening applied. We look at the financial screening. We also look at financial ratio. Also, we look at the business activity screening. So on the business sector side, this is to really ensure that companies that has no significant exposure to non-permissible revenue sources relating to activities such as gambling, weapon, alcohol, tobacco, pork, and so forth. Maximum 5% of total revenue allowable can become from this non-permissible activity. At the same time, we also look at the financial ratio. The purpose on that is really to exclude companies with unacceptable level of conventional debts, the interest-bearing investment, impure income. So when we look at this investment ratio screening, we look at it over 24 months of average on the market cap, and this has to be less than 33%. And moving on into when we talk about impure income, a point to touch upon is really the purification, the dividend purification. So within the fund itself, it may receive company dividends as part of the company normal business operation. However, it may generate a small part. It has to be less than 5% of the revenue from non-compliant activity. And this needs to be ring-fenced. Hence, there's a need to, we call that purification of dividend. This is calculated annually. So methodology, it has to be approved once again. So within the investment guideline, it has to be approved by our global Shariah supervisory committee. And then how it typically range between about 1 to 5%. And then we will be donating it to charity. In this case, the BBC Children in Need. So from HSBC Asset Management perspective, we are basically managing this from the beginning to the end to allow our investor to have a peace of mind, knowing that the dividend purification is managed by us, hence ensuring really a full compliance with the Shariah guideline. In terms of the supervision, so on the Shariah committee, what they typically look at is they will look at whether, well, first of all, they will have to approve in terms of charity, which charity that we will be donating the impure income. They will also look at the prospectus. They will also look at in terms of the investment objective, the use of investment instrument. Basically, everything needs to be in line. And at the end, there will be an annual certificate of the fund to make sure that it's in a compliance of the Shariah compliance portfolio. So, yeah.
Sure, thank you. That was very insightful. So again, to summarize, Shariah compliant equities will try to avoid companies involved in things like, alcohol, pork, gambling. But in real life, there will be some flexibility given by, restricting the revenue threshold to 5%, and the company will need to be approved by Shariah scholars. And now, Afiya, could you walk us through the details of Sukuk investing, please?
Thank you so much. So as my co-panelists have already touched on the equity bit, I get the privilege of doing the bond bit. Sukuks are often referred to as Islamic bonds. These are, again, financial instruments which are designed to comply with the Sharia law, as alluded to by Alan. The main premise is that it prohibits the payment or receipt of interest. Thus, instead of earning a fixed interest, the Sukuk holders have an undivided ownership in a tangible asset project or an investment activity. The fundamental distinction is that you are a part of the business. You share the profit and loss. You're not just predominantly earning a fixed interest-based return. As mentioned before also, the underlying business activities of the issuer have to be halal. For example, it has to prohibit alcohol, tobacco, drugs, adult entertainment, all those activities, even at the issuer level. The big difference that we see between the conventional and the Sukuks is that Sukuks are asset-based in nature. While they are linked to tangible assets, the financial strength and the reliability of the issuers also play a very critical role to gain investor confidence. Major markets that we see in the last few years, we've seen the Sukuk markets have gone through a massive renaissance era. There have been record issuances. There have been a rush of new issuers coming to the market. The diversity and the breadth of issuers that we're seeing has been expanding exponentially. So as you can see on the chart, the size of the Sukuk industry has been growing rapidly. But what's critical is that it's not limited to just Islamic jurisdictions. We are not just seeing Indonesia, Malaysia, GCC countries coming in issuing debt in the Sukuk format, but also other countries like Luxembourg, the United Kingdom. We had issuers, developed market issuers like AirCap, Airlease. So thus, we are seeing a massive trend change where non-Islamic issuers are also looking at this as a viable funding tool. The space has grown exponentially, and we expect this to grow further to at least $1 trillion just in outstanding, which is going to be 27% of the overall Islamic financial industry. So that's me. And then we'll have to just go to the other slide. So as I've highlighted before, the differences between the Sukuks and conventional debt is that you indicate an ownership in the underlying asset of the issuer. It's not predominantly just a debt obligation. The issuers could be anything between corporates, sovereigns, supranationals, like you have in conventional debt. Now, interest and profit payments, as it is haram in Islamic law, interest is not interest for us. We get a share of profit, which is generated by the underlying asset, which could be lease rentals. It could be pre-agreed profit rates on the commodities or the assets. While in conventional debt, you have the cash that is generated through operating activities and which is fixed in nature. The interest schedule could be fixed or floating in nature. Initially, when Sukuks were formed, it used to be predominantly used by banks and financial institutions and sovereigns. So they had like floating instruments, but the fixed instruments have grown exponentially since 2010. So we have both structures, fixed and floating. In terms of size, we are about $930 billion currently and expected to grow to at least $1 trillion just in 2025. While in terms of size for conventional debt, just the US IG corporate debt market stands at about $7 trillion, while the EM, which is emerging market hard currency size, is approximately $1.5 trillion. So in terms of size also, we are smaller. So we're in more niche asset class compared to just conventional debt. In terms of liquidity, we have daily liquidity for both the assets. There is the depth of the market, as I mentioned before, has been growing. So there has been no issues with liquidity. In terms of rating, more than 75% of hard currency, which is USD Sukuk issuers, are investment grade in nature. So you're getting credit quality along with an asset class which is performing extremely well. Our biggest investor base stays Islamic banks and Islamic funds, which are predominantly sticky in nature, because of which you will always have a higher demand for these issuances compared to the supply. And in the last but not the least, we have benchmark indices from JP Morgan, from FTSE, from Dow Jones. So that also bolsters the market liquidity and transparency that we would like to see in this asset class. I think that's me for now. Over to you.
Thank you, Afiya. So actually, in summary, conventional fixed income instruments are deemed haram because they generate interest income. And Sukuks are a way for Sharia compliant investors to invest in an asset class that is similar to fixed income, but is halal. So now that we have a basic understanding of what Sharia investing means, let's explore how our different fund managers approach Sharia investing differently. Starting with Azimut this time. Afiya, back to you.
Thank you so much. So Azimut Global Sukuk Fund has been present since the past 12 years. We have been consistently developing. We've been consistently performing in the performing top quartile performance, and we are an investment solution which is designed for stability, for daily liquidity, and long-term value creation. What truly sets us apart is that we maintain a carefully curated investment-grade Sukuk portfolio, ensuring credit quality and long-term stability for investors. We are also designed for low volatility, which means that we are built to navigate market fluctuations with resilience, providing our investors with the peace of mind and market returns during challenging periods like we witnessed in 2022. Other cornerstone of our strategy is that there's deep diversification across sectors, geographies, which helps us mitigate risk while optimizing returns, creating a sense of a balanced approach that adapts to every market situation, as I mentioned. The fund is also denominated in USD, so it offers daily high liquidity that whenever the client wishes, he can get seamless access to his dollars whenever needed. At the core of our strategy is a dual-layered approach. We combine our top-down research with rigorous bottom-up analysis, which means that we're able to identify macroeconomic trends while simultaneously selecting high-quality individual issuers. We also, at Azimut, leverage our proprietary models, which is a scoring matrix, wherein we have a comprehensive tool that evaluates each country on a fundamental and technical level, which is further segmented by credit ratings too, which helps us get an in-depth understanding in terms of bottom-up analysis and top-down. So our investment approach, and the last bit, is that we are anchored in 3 principles, as I mentioned. We maintain a long-term investment horizon, focusing on sustainable growth while prioritizing value at all times over volatility. We efficiently, actively manage our interest rate exposure and portfolio duration, adapting seamlessly to both rate cutting and rate hiking cycles that we witnessed in the last few years. The team also is actively seeking tactical opportunities and relative value opportunities, identifying mispriced assets and inefficiencies in our markets to generate additional alpha for our clients. This approach, this basic approach, helps us remain agile, responsive, and consistently positioned to deliver strong risk-adjusted returns. In conclusion, the Azimut Sukuk Fund is not just another Sukuk fund. We have a disciplined asset management approach with robust research and a commitment to our investors. We want to see capital preservation, stable income, and a reliable USD-denominated asset for our investors. In this slide, you can see that the portfolio is well diversified across sectors and geographies that I mentioned. And in terms of ratings, we always maintain an average investment-grade portfolio. And that's about it. Thank you.
Thank you, Afiya. So I guess we could say that in essence, Azimut Sukuk investment process, it's actually not very different from a non-Sharia fixed income investing because the same level of rigorous credit research, diversification, and portfolio construction is done by the Azimut team. So
Yes.
by investing in Sukuk, we can ensure that our investments are similar to fixed income, but Sharia compliant. How about Franklin Templeton? Alan, could you walk us through how you approach active equity investing under a Sharia lens? Alan, so sorry, I think the audio is not working once again. That's better.
Can you hear me?
Yes, thank you.
Hi, can you hear me?
Yes, we can. Please go ahead. Thank you.
Okay. Yeah, sorry about that again. I think the best thing is not to go on mute because every time we go to mute, it kills the audio. All right, sorry. So maybe just starting with this slide, Franklin Templeton has been in Shariah investing for a very long time. We've been in this for over 35 years. We manage about $4.13 billion in Shariah compliant strategies. And I think the best testament to some of our achievements really is that we've been named Islamic Asset Manager of the Year in Malaysia for 11 straight years. And we hope to be able to continue that string of awards. If we can just turn very quickly to the next slide. This is the team that is responsible for the strategy. I have about 35 years of experience. Peter, Ferdy, and Warren helped me manage this. You could say that they are, sort of people I can bounce ideas off, and they sit right next to me as backups as well. I think the thing to take away is that we are very much price disciplined. We are genuinely global, so we search the world for investment opportunities. We are very much long-term in our investment philosophy, and we manage to sort of include companies with all market caps within the portfolio. And to drive that point home, if you turn to the next page, the basic building block of our portfolios and the Shariah portfolio that you are invested in is really this team of investment analysts who actually recommend stocks to go into the portfolio. So Jacqueline talked about the exclusions, all the necessary exclusions within a Shariah portfolio. That is filtered down to this team, and this team will then recommend stocks to go into any Shariah portfolio. And I think this is very key to pay attention to, because each one of us is a sector specialist, and we know the sector in and out, and we know where the opportunities are down to the stock level. And I think this is key in differentiating ourselves from other equity fund managers. And if you turn to the next page, I think this is where we also can illustrate that we are an active portfolio manager. So if you look at the chart on the left, the blue bar is where the portfolio is currently position, and the light green bar is where the index is. So you can see that we are taking active bets based on the active recommendations of the analysts you saw on the previous page. So for example, within the sectors, we are underweight information technology because we think that they are a little bit expensive, particularly in North America. So instead of having 35% or more in the benchmark, we are at about 30% in the portfolio. Not insignificant, but we are basically taking an active bet saying, we think some of these names are expensive and they are due for a little bit of a correction. Where we like certain sectors is maybe if you look at industrials, we are 15, almost 16% weighted in the portfolio versus the benchmark at 11 to 12%. So there we are taking an active positive bet in industrials, and so on and so forth. If you go down the list of industries, within the regions on the right-hand side, you can see that we are taking an underweight within North America. You see the red outline on the top of the right-hand side. The index is about 65% in North America. We are only at about 46, 47%. So we are taking a fairly active underweight in North America because, and I'll talk about this a little bit later, we think it's a little bit expensive. And where we are overweight in Japan, and very recently in the past 6 months, we are now overweight China as well. And if you turn over to the next slide, we can explain why we are positioned the way we are positioned. If you look at the valuation of the US going all the way back to, let's say, 2007, the US has been trading at a significant premium versus the rest of the world, especially since 2020. And that premium reached an all-time high in 2024. We could not bring ourselves to go, market weight in America because of this, very expensive valuations. And sure enough, in the past 6 months, since President Trump got inaugurated, that premium has come off. And so if you look at this chart, that little curve, that sharp downturn in the long-term average premium has come way down from all-time highs. So the fund being positioned the way it is being underweight America has benefited tremendously from that. If you turn over to the next slide, again, why are we overweight China? We've been underweight. We've actually been zero in China for many years, until December 23, when valuations, again, we're very much guided by valuations. Valuations reached compelling levels, and we said, maybe we shouldn't be taking a zero weight in China. We decided to close that underweight. We initiated a very minimal position in China, and within the next year, fortunately or unfortunately, I guess fortunately, there was a stimulus boost in China by the central government, and we realized that drew a line under the sand for underperformance of China, because the government now was getting a bit worried about the Chinese economy. They were doing something about it, and we raised our weight again in China, and some of the companies within the portfolio may be quite well known to you. We know we have JD.com, an e-commerce company. We also own BYD in China. And that again has proven to be very additive to the portfolio for our investors. And again, I just want to point out that unless you're an active fund manager, you cannot take these opportunities. You cannot say, look, I want to be overweight China. I want to be underweight in the US. Active fund managers are able to pick out these points of opportunities or stress, in the markets and benefit from that. If you turn to the next slide, maybe I'll just finish off on why we like Japan. If you look on the left-hand side, Japan is trading at a multi-decade discount to the rest of the world, as opposed to what we showed you a little bit earlier, where US was trading at multi-decade premiums to the rest of the world. So we think that Japan deserves an overweight. And again, if you look on the right-hand side of this slide, Japan has been neglected in global markets. Foreign investors have been selling Japanese stocks over the past decade. And investors are very underweight Japan, which we think actually sets us up for a good opportunity for it to start outperforming. And finally, if you turn to the next slide, Corporate reforms in Japan. I won't go through all the nitty-gritty of this slide here, but corporate reforms in Japan are unlocking and creating shareholder value for the companies. And this is starting to re-rate the shares. Pressure from the government is forcing a lot of value that's been trapped in the balance sheets of some of these Japanese companies. And that is happening. So we are seeing a lot more dividends being paid, and some of those profits being shared back with investors, and that's again benefiting shareholders in our portfolios. I think I'm going to stop there because, in the interest of time, I'm not going to go through some of the other slides, case studies and all that. I think that might be a bit too much a bit too wordy. I'll just hand it back to you, Kyungju, at this point in time.
Thank you. Thank you, Alan. I think your presentation, what it highlighted effectively was the fact that, your expertise in terms of rigorous fundamental research and active equity investing, all of those are being applied to Shariah funds as well. And our Shariah compliant investors can be rest assured that, this level of active investing, the same level that we see in non-Shariah equity funds, they will also benefit from them as well. Last but not the least, Jacqueline, could you walk us through how passive Shariah equity investing is being done by HSBC?
Sure. Yes. So on the passive side, this is a little bit, definitely a different kind of approach. When it comes to Shariah screening of passive, we look at the benchmark. And like I mentioned earlier, how we're actually being measured, rather than the performance, but really how well we track the index. And how well we manage the cost in terms of the fees, in terms of how we treat the dividend, and how well managing the cost when it comes to rebalancing. And there's a message which I'd like to pass across is that when it comes to managing passive, even for Shariah, there is a possibility that the performance might deviate from the parent index, because when you basically, it's quite similar to what we call it the ethical investment product or sustainable, in the sense that when you apply a screening to the benchmark, it's basically a subset of the original parent index. So naturally, you'll be missing some securities. So naturally, there will be a slight deviation. Overall, in the long term, if you look at it in terms of the risk-return characteristic, it will be quite similar, but then the deviation can be positive or negative. So take, for example, the HSBC Islamic Global Equity Index Fund versus the parent index, which is the Dow Jones Islamic Titan 100 index. Over the past 1 year, we are looking at a difference of about 20 basis points. So this is extremely tight in terms of tracking, and which is why it's also one of our flagship funds that has raised right now close to about over 7.5 billion over the past 20 years. I think the message I'd like to also emphasize is that for Shariah compliant investors, the best way to start off with in terms of investing is really to start off with the belief and also be aware of this possible deviation that you might get. Overall, in the long term, the risk-return characteristic will be the same, but there will be deviation coming from the fees, coming from the so-called the screening of the securities from the parent index. That's all from my side.
Thank you, Jacqueline. So, passive investing is pretty popular among Endowus clients, actually. And one of the questions that we got from Slido now is whether Endowus will be looking to onboard a diversified market cap weighted Shariah fund. So I would say that this is the one for you if you're a Shariah investor looking for a passive equity fund in Singapore. Now, looking ahead, what kind of trends and developments do our experts foresee in the evolution of Shariah investing? Next slide, please. Alan, could you give us an overview of the Shariah market growth that you have been exploring?
Yeah. So what we have seen is that Shariah investing is getting more popular for a number of reasons. The first of all is that the Islamic market is growing a lot more faster than conventional investing, because the disposable incomes in Islamic countries is growing a lot faster due to a number of factors. First of all, it is growing because population growth is a little bit faster in many Islamic countries, and then the middle income segment of that population is growing as well, and growing just as quickly, if not faster. So the availability of funds to invest is growing faster than what we are seeing in the non-Islamic side of things. On top of that, Sharia investing isn't just for Islamic investors. Because of the ethical standards that Sharia investing adheres to, you could also see it as a sort of an ESG kind of a fund. So if you believe in ethical investing, or if you want to get involved in ethical investing, Sharia investing Sharia funds is definitely one vehicle to consider. So just those few factors is contributing to the growth of Islamic investing and Sharia investing, and I think Franklin Templeton is well placed to offer more product and to capture some of that growth.
Thank you, Alan. Now, so how does this growth of the Sharia investing market tie into the Sukuk market? Afiya, up to you, please.
Hi, thank you. So Alan covered the certain basic factors quite well. He mentioned that the core Islamic countries, the disposable income has been increasing, and we have been seeing that in countries like Saudi Arabia and UAE, because of which we have seen increased demand for asset management services also, which are Islamic in nature. We remain extremely positive on the Sukuk market outlook. As you see that the issuance that we have seen in the last 10 years has seen a massive shift in the last few years itself. Predominantly GCC issuances used to be 75-25 Sukuk and conventional, while now it is almost like 50 and 40 as of 2024, and expected to stay around the same levels. There's been a lot of demand for Sukuk from the investor base, and people are seeking these opportunities at a more rapid pace compared to the conventional debt. We also see that the issuers and the breadth of issuers is expected to deepen further because the financing needs are expected to continue. We are seeing that Saudi Arabia is undergoing a massive diversification program. They are spending a lot of money to become less oil reliant, and that is expected to also drive issuances. Then in terms of just visibility, availability of information, there's been a lot more benchmarks that have been added. There's been a lot more liquidity, a lot more trading activity that's happening on the technical side, which is further helping the liquidity, the underlying secondary market trading also for Sukuks. As I also mentioned before, the investor base is not predominantly limited to just Muslims or Islamic investors. You are seeing investors who just consider this as a niche asset class, which has been outperforming other assets or other fixed income assets since the past 5 years. Just to give some perspective, in the last 5 years, since 2019 to now in 2024, Sukuks have delivered a total return performance of over 14%, while if the investor was just in conventional USD denominated investment grade portfolios, they would still be down about 2% after 5 years. So this could be considered as a diversification tool in a niche asset class to protect the investors across market scenarios. It doesn't necessarily have to be a rate cutting scenario, a rate hiking scenario. No, this can be a huge diversification tool. And we have seen, to be honest, we have seen a lot more investors who are participating in issuances from the region. Before, if you had a PIF issuance, you had predominantly GCC issuers who were participating in it. But now you have a lot of European investors, you have a lot of US-based investors. So the mindset that we have witnessed in the last few years is shifting. And that has been extremely positive. If you just give you one more example, when Indonesia came up with their Sukuk, the USD Sukuk, it was not just Asian investors. You had European investors, you had hedge funds, you had very niche investors also coming in and participating, which basically shows that the stigma or the lack of information about the Sukuk asset class is shifting. People are getting more aware of it, and that's a huge positive sign for us. So we remain extremely positive on the outlook for Sukuks.
Thank you, Afiya. So I guess we have exciting developments ahead of us in the Sukuk market, and we're happy to see the market grow further, to benefit Sharia compliant investors and even non-Sharia compliant investors as well. How about the equity side? Jacqueline, please.
Sure. I think just on the outlook itself, one word, the outlook is bright, both from the demand and also from the product standpoint perspective. I think looking at our flagship, the flagship fund, in terms of demand side, I think over the past 5 or even 6 years, it's pretty much in line with the broader interest in terms of the ethical investing. The lion's share, I think, in terms of the flows, has been flowing into Islamic global equity fund on the broad passive equity side, really reflecting the trend in general. So just to share a bit on this fund is that it is actually part of our HSBC pension scheme. And likewise, just to alert both our participants, is that it's not just Muslim investor, because back then, when we look at how the flows actually pick up tremendously over the past 5 to 6 years, we went to speak to some of our investors, given that it's also part of our pension scheme, as to why they like the fund. As I said, they are not all Muslim investors, so they do like basically the so-called light ESG screen, the ethical part of it, and also there is a decent performance. So all in all, that actually helps to grow the demand of the fund. And then just on the product side, what we have been seeing is that there are too few products out in the market. Hence, on our side, we have been addressing the demand by creating basically a very widely available UCITS investment products, across from ETFs that is widely publicly available across the jurisdiction. So by and large, right now, we have like nine products in the markets, cost-effective ETFs that range from basically the different regions, the real estate, also the Sukuk on the passive side, and also a multi-asset fund, just to provide more products out in the market for our investors.
Thank you, Jacqueline. It's really good to know that HSBC's Islamic fund offerings are growing together with market demand, and the fact that the needs of the Islamic investing communities are being increasingly addressed. And with that being said, now we'd like to introduce the new Endowus Shariah portfolios. And some of you may be wondering, what's the point of investing in this portfolio when I can just invest in the single funds? And the short answer is that the portfolio is a simple, optimized bundle of these individual funds. As we were shown by our fund managers, each of these funds have different investment philosophies and processes to approach Sharia investing. And by combining them in a way that we believe is optimal for growing your wealth in the long term, the Endowus Sharia portfolios are designed to simplify your investment journey. So we have a total of 6 versions for the Sharia portfolios, ranging from 100% Sukuk to 100% equities. In theory, 100% Sukuk has the lowest level of risk and is recommended for investors who don't enjoy taking risk for high returns. On the other hand, 100% equities has the highest level of risk. And in investing, they say high risk, high returns. So this portfolio may be suitable for you if you have an aggressive investing style. And in between, we have all these other variations that you can choose based on your risk tolerance and investment time horizon. You can find a detailed guide on our website on how to choose the right portfolio for you, and we'll show you how to access them later. So here's an overview of our suggested fund allocations for 100% equities and 100% Sukuk portfolios. For equities, we have a 50% allocation to HSBC Islamic Global Equity Index Fund, and 30% to Templeton Shariah Global Equity Fund, and the remaining 20% to Franklin Shariah Technology Fund. For Sukuk, we have an equal weighted portfolio consisting 50% Azimut Global Sukuk and 50% Franklin Global Sukuk. Diving a little deeper into the 100% equities portfolio in terms of geography, we can see that the portfolio has over 70% allocation into the US markets. And this is in line with the broader global equity index, where US companies today dominate the market. But aside from the US, you can also see a diversified exposure to other geographies like Japan, UK, Germany, and so on. In terms of sectors, we can see that the equities portfolio will have a high allocation to the technology sector. And that's really because technology companies dominate the market today. But more importantly, it's easier for technology companies to pass the Shariah screening because technology companies, they seldom sell products like alcohol, pork, gambling, and so on. We can also see that the portfolio invests very little into sectors like financials because, again, banks that earn profit from interest or riba is prohibited under Shariah investing. But all in all, you'll get a diversified portfolio with exposures into many different industries that are compliant with Shariah principles. In terms of the Sukuk portfolio, they consist of very high quality, above investment grade securities with a slightly lower duration than the broader fixed income market, which makes it a little lower risk, especially during times of rate hike cycles. You can see that the regional exposure is actually quite different though, and that's because a lot of Sukuk investors today, a lot of Sukuk issuers today are from Muslim countries. So you can expect to see more countries like UAE, Saudi Arabia, Indonesia, Malaysia, and so on. And here's a quick overview of the historical performance for the 100% equities and 100% Sukuk portfolios from December 2018 to February 2025, which is slightly over 6 years. And you can see that the equity portfolio tends to display a more volatile performance than the broader equity markets. And that's because of a few reasons. So for example, the portfolio has a higher allocation to technology companies, like we mentioned just now. So it's really important to assess whether you are okay with taking this kind of risk before you invest. The Sukuk portfolio, on the other hand, tends to be less volatile than the broader fixed income markets. And again, that's due to reasons like lower duration and the fact that the Sukuk securities, they tend to be less sensitive to global market events. And now, hopefully the webinar got you excited to invest in the portfolio. So here's how to do it. First, go to our Shariah portfolio launch article. You can access this article by the link you'll see on the description of this webinar video. Or you can also go to our website to see the article. Once you're on the article, you'll see a lot of details about the portfolio that you can take a look if you're interested. You can also see a quick guide on how to select the right portfolio based on your risk tolerance and investment objective. Anyways, on the article, scroll all the way down to access the portfolio links. Choose the portfolio that you want to invest in and click on it. You'll be taken to our app where the portfolio weights have been pre-filled for you, and you can take it from there. If you have any questions, you can feel free to reach out to our MAS licensed representatives who will be happy to help you kickstart your investment journey. And with that, we have come to the end of the webinar, and we'll proceed to answer some of the questions that we have received from you on Slido. So let me just read through some of the questions that we have received. One question is that historically, Shariah compliant funds tend to have higher levels of fees than non-Shariah compliant funds. Do you see that continue? Do you see this kind of trend continuing into the future, or can we expect to see more cheaper Shariah compliant funds out there in the market?
Hi, Kyungju. I can take this question. Well, maybe I'm coming from a bias standpoint, coming from passive. So passive instruments are generally low cost effective. I think where we are trying to address the need and also this so-called higher fees in general than conventional is the fact that apart from the fact of funds, we have also launched a series of ETFs, exchange traded funds. So these are publicly available, and we are talking about entry of one share to get into the exposure. So it can be lower than that. So this is extremely cost effective.
I may also add, Kyungju. So basically, even on the Sukuk side, with the kind of competition and the kind of growth that we've seen on the Islamic side, the cost has become much more effective in the last few years than we had in the last few decades. So we have seen a shift. The cost of even structuring a sukuk has become cheaper because there are better regulatory tools currently which weren't there before. So as Jacqueline also mentioned, the trend is shifting and we're seeing that shift. It is expected to go down further from here on.
That is good news to hear. And I would assume that, the better demand we see from our investor side as well, the better, the faster the development in the market would be. So please stay interested in, investing your journey, and we'll see how it develops into the future. I think a related question regarding fees that I see on the slide though is, do the funds pay fees to the Shariah Advisory Board? What are the typical fees, and are they included in the total expense ratio that are, paid by the investors?
If I may add again.
Of course.
So yes, the Shariah board has a fees attached to it and we pay them annually. The fees are very minimal and they're included in the total expense ratio of the actively managed funds. We get concurrence for them for each and every new issue that we participate in, because of which, yes, there's a fees attached to it, but it's very, very minimalistic.
Yeah, thank you for the clarification. And I guess as an investor point of view, although it comes with a minimal fee, having the extra advisory from Shariah, qualified Shariah scholars to, approve or reject any investments that the portfolio managers want to make will, give you an extra piece of heart that your hard-earned money wouldn't be invested in a haram company that would generate returns for you in the future.
Yes.
Thank you for that. I'm just still reading through the questions. I think this is more for Endowus, but one question that came in is it sufficient for investors to invest into Sharia compliant funds, or does Endowus also need to be Sharia compliant as a company, as well as our UOB Kay Hian as well? I can take this question. I would assume that this is a matter of personal preference. We do our utmost best to select the funds that on the fund level are certified as halal investments by these independent Sharia scholars, as well as by the companies that are operating the funds. But as for Endowus, we do not have such separate certification to say that Endowus as a firm is certified Sharia compliant. But with that being said, we don't typically earn from unethical kind of business practices. We receive all the commissions and give them back to you 100% as cashback. So we're always recommending the products that we think would be in the best interest for you and your future. So if you consider those kind of aspects as well, I would be happy if investors could also view Endowus as an ethical entity who is always working for the best interest for you and your investment journey. I think actually that's most of the questions that we can address in this session. Many of them have already been addressed by our team. And if you have any further questions, please feel free to reach out to us again. And you can speak to our MAS licensed representatives who can give you a better picture. I guess that's it for the webinar. Thank you for joining. And for those who celebrate, we'd like to wish you a very blessed Ramadan and Eid Mubarak. Thank you, everyone. Bye-bye.
Thank you.
Bye.
Bye.